Do you own a rental property? Have you ever considered owning a rental property? What about VRBO or listing it on Airbnb? Well, the IRS just changed the tax rules for how those types of properties are going to be treated. I've got those details and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Do you own a rental property? It's stuttering here because it's very appealing. It's very attractive. We see lots of people, as we're doing comprehensive financial planning, come in and say, one day I'd like to own a rental property. Or here's an idea. We're ready to upgrade the house. We've outgrown our house. What if we bought a new one and rented this one out? Lots of people think it's part of the FIRE movement, financial independence, retire early, as a way to replace a job income. Yes, having a rental is a job. And so the point of the video here is the IRS has actually changed the tax treatment. It changed the ruling on the tax treatment. It's evolved, let's say. I normally wouldn't use that term in regards to the IRS to explain the IRS, but it has evolved to account for how should rentals that are vacation rentals or Airbnb type rentals, how should they be taxed? The same as a long-term rental or differently? Now, before I get into that, if you've ever considered having a rental property as part of your overall net worth or financial independent strategy, talk to your certified financial planner. Listen, it makes a lot of sense for a lot of people. It doesn't make a lot of sense for everyone though. And I've got 4 laws of rental real estate. I've done plenty of videos on that before. So if you're going to do it, I'm just going to give those to you quickly. Number 1, you need cash, especially with interest rates being so high. It just costs more to borrow and use someone else's money to do it. So you've got to have some cash. I'm not saying you got to buy the property with cash. You've just got to have a lot of cash for a down payment or to make sure you've got enough margin or to help cover expenses, those sorts of things. Second, speaking of expenses, you've got to have some know-how, because if every time something goes wrong with the rental, you've got to pay someone else to fix it, that's really going to eat into your margin and eat into whether this is going to be financially lucrative to you or not. The third is you've got to have time. Rentals, whether it's a vacation rental or a long-term rental, it requires some input, some involvement from you. And it's not just a purely, okay, I'll just have this thing going out of sight, out of mind. No, you're gonna need to have some time devoted to it. So the whole financial independence, retire early, well, running rentals is now your job as opposed to going to the office or something like that. And you might say, no, I can hire a property manager. Well, the great property managers are busy. And the ones that have find a way to scale, they're expensive. And so that eats into your margin as well. I'm not saying don't use a property manager, but just don't assume that, well, I'll have a property manager that will make all these problems go away. So those are the 3 laws. The 4th law of rental real estate is you got to have tough skin. You got to be okay with confrontation, because someone's going to want to get a week for free or a month for free, or you're going to say, hey, listen, on your way out, I need to keep your security deposit. That blood stain on the carpet wasn't there before. Oh, yes, it was, or whatever. Or, hey, I can't pay rent this month because if I do, I'm not going to be able to buy my kids Christmas presents. And you've got to have tough skin. You've got to be okay with confrontation, because you're going to hear a lot of that. And you might say, well, no, I'm going to have great tenants. Well, everyone is. Have you ever had a relationship that went sour, a friendship that went sour? Things can start well and still, have some strife to it. So not the purpose of today's video. It's more so about the tax changes, but wanted to share that since talking about rental real estate in general. All right. So before 2022, the IRS has lumped pretty much, rental real estate into 2 categories. A house that you live in that you very rarely rent, or a house that you live in, or a separate house that you actually rent all the time, or not all the time, but a lot of the time. And so that's my overly simplistic way of explaining it, but take a look here at a couple sources to help make sense of what I'm saying. But essentially, if it's a house that you live in and you rent it on Notre Dame football weekends, that's where I live, near Notre Dame, or you rent it just, a couple weekends a year, something like that. If you rent out the house less than 14 days, you don't have to report the income. You don't get to deduct any expenses, but you don't have to report the income, and therefore, that's very appealing. You don't even need to report it on your tax return. It's sort of like it didn't happen. You can just sort of sweep it under the rug. Yeah, I rented my house out, but it was 10 days. I got some income. Yeah, I had some expenses, but the income outweighed the expenses, and that's just can be cash money in your pocket. You don't need to tell the IRS. Versus a house that you live in, but you rent more than 14 days out of the year, or a house that you don't live in at all. You don't live there 10% or more of the time, and that's a complicated rule, but it's just perpetually rented, or you're trying to rent it. Well, then you've got to report that income on your tax return, depending on whether it's a residence also or not. Determines, well, do you get to deduct all the expenses or some of the expenses, and where on your tax return does it land? That's an overly generalized, overly simplistic explanation. So if your situation has more details to it, you're going to want to talk to a CPA, a certified financial planner, to help them kind of apply that to your situation, but be aware of these upcoming changes. Typically, though, that rental income would fall on what's called Schedule E, meaning you report the gross income, total rents received, minus all the allowable expenses, gives you a net profit. That net profit lands on the front page of your tax return, subject to federal tax and applicable state and local taxes if they apply to you, but not self-employment tax, because it's just a side rental. It's not your business in the majority of instances. All right, and then prior to 1/1 of 2022, even rentals that were considered short-term rentals, that were maybe Airbnb, VRBO, those sorts of things, were kind of treated under that rule. But listen, this, some Airbnbs, some VRBOs, it's like a hotel. It's like renting a hotel room where the owner is going to set you up with all the amenities and everything. They're going to supply linens. It's fully furnished. They're going to give you access to certain things. There's going to be some perks and all that sort of stuff. It's all going to be part of you renting this house out for a week or whatever. My family, we're doing this. Actually, I believe it's our second time that we're doing an Airbnb. We're doing this for the upcoming spring break. And yeah, it's fully furnished. They're going to provide access to a golf cart and some, passes for golfing and some other things. So they're really going to set us up. It is like staying at a resort, but our own property. Well, the IRS has been kicking this around saying, well, should this apply like a normal rental and not be taxed as self-employment? We'll just tax it on that Schedule E, or is it different? Should this be subject to self-employment taxes? Okay, well, late 2021, and no one's really talking about this. Late 2021, the IRS came out with an official memo, and that they're concluding that VRBO, Airbnb type rentals, where you're providing a substantial service, those types of rentals are going to be treated as self-employment income, and not only subject to federal taxes and state and local, but also subject to self-employment taxes. If you go into that memo, and I've got an article here that we'll link below in the description that sort of talks through it, but if you go into the memo, there's a couple examples that the IRS shares to illustrate this point. So in the first general example that the IRS used in this memo is, again, a vacation rental where the owner provided linens, kitchen utensils, all the other items to make the property kind of fully furnished, but then also provided daily cleaning, access to Wi-Fi, access to a beach and rec equipment, and some prepaid vouchers, with access to, like I mentioned, access to go play golf or a round of golf or something like that. In this example, the IRS says, listen, that's substantial service. And I think you can agree, that's more operating it like a business versus, hey, I've just got this house for rent that's completely unfurnished. And so while I don't love that the IRS is treating this separately, I think you can sort of view that that example and how a lot of Airbnbs are run is different than just a shell of a house that someone moves into and lives there for a year and rents and so on. So in that example, the IRS said, yeah, that meets the qualifications of substantial services, and therefore this is not exempt from the new rule, and it is subject to self-employment tax. Second example, and this one's important, okay, because as I was reading it, I thought, well, this might be substantial services as well. But second example, fully furnished room and bathroom, and the owner cleaned the rooms and bathrooms between each occupant's stay, but didn't provide any other amenities or services, and the occupants didn't have access. In this example, they were renting just a room or just a part of the dwelling, didn't have access to everything else, really just had access to their space that they were renting, and like I said, furnished, but didn't have all the amenities and turned down every day and all that sort of stuff. In this example, the IRS is saying this is an exception. This is not an example of providing substantial services. This is an exception from the new rule, not subject to self-employment taxes. So guys, this is a big deal. This is a big deal, and I think is going to catch a lot of people by surprise when they go and file their taxes this year. And there's going to be a couple things that happen. Number one, their CPA might actually fill it out correctly and show the self-employment tax, and the taxpayer, you are going to be, owing a lot more tax and be shocked. Right? I think that's one option there, or one potential path. Second is you might have your CPA do the return, and your CPA might say, hey, this is the new rule. Should we implement moving forward, even though they're sort of skirting the rules for this past year? Ultimately, I think there's going to be a lot of surprise. Short of the surprise, I would also look at what planning opportunities exist. If you are currently operating a rental that would probably meet the substantial services, but you don't want it to, well, are there some proactive decisions that you can make, some discussions you can have with your CPA to say, yeah, well, we used to offer this, we're now going to offer this so that we can avoid having this be considered substantial services? Or no, if it's part of your business, your value proposition to provide these substantial services, well, could you then open a retirement plan or do something else to shelter some of these dollars to help manage some of the tax bills? All right, there's the new rule. How does it apply to you? How should this influence your planning? Work with your certified financial planner on that. If your CFP is not working with your CPA, it's not going to help you. Your CFP needs to be collaborating with your CPA to ensure you're on top of this, avoiding surprises, capturing opportunities. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.